Hey folks, Dan Bird here on Thursday, December the 4th for the midday update. Sorry I went long yesterday, lot to cover, and I'm going to try to make it short today. Try to make up for yesterday. So I'm not a financial advisor, so this is all for educational purposes only. Let's take a look at, and by the way, if you're interested in signing up for Stock Charts, which is the platform I use for all of my charting, they're offering 25% off right now. If you come to my website, breakpointtrading.net, you can click right here and go to that offer. So let's take a look at what the market's doing today. So far, it's not doing much, frankly. Hopefully, it'll stay like that all the way into next week. Next week is the Fed meeting, and they actually might cut next week. If they do, that might help the market. Of course, the week after that is the jobs number, which is probably not going to be great and may hurt the market, but we shall see. Anyway, here's what it looks like. Here's the S&P. Money flow actually is negative today. You can see we're still in this sideways box. Like I said, we probably would just be moving sideways for most of the week, which is we're still doing. Technology is actually up slightly, discretionary down slightly. Communications is pretty flat. Those are the aggressive sectors. For the defensive sectors, Staples is down significantly. So that actually is rotation back into technology. So rotation back into the aggressive side. Although money flow is, there's not a lot of commitment, not too much commitment in moving that way. Utilities are down and real estate. So the defensive areas are down. That's bullish, actually. Cyclicals, financials, and industrials are both up. These are actually can be, usually are aggressive sectors, and I'm thinking about moving these over into with the aggressive sectors on the first page. I might do that actually. Financials and industrials both are up today, so that's an aggressive move in the market. That is a bullish move, I should say. Healthcare is heading down. It had been going up, and you can see for the last week it just continues to go lower. Materials is lower, and energy is pretty much flat for the day. Let's look at the rotation. Growth versus value is actually heading down, while discretionary versus staples is heading up. Technology is heading up, and semiconductors are flat. So what does this tell us? It looks like there's still a little bit of rotation out of the growth area, even though technology and discretionary are doing well. So it's very subtle under the covers. This is what might be setting up once we get through the end of the year and we maybe do hit 7,000. This rotation might be going on right now that eventually will cause the market to roll over. We'll see. There's the breadth. Breadth still looks pretty good. Everything's above 50%. Bullish percent index above 50%. The small caps and medium caps, Russell 2000 is the big winner today. It's continuing to head higher. You can see money flow in this one is actually doing pretty well and definitely outperforming the large cap S&P. So this is where the money is, where the money's been flowing. It's been doing that for the last few weeks, actually. Again, breadth is very positive. Everybody's above the 50% level on mid caps and small caps. And then the NASDAQ 100, again, money flow is pretty much, it's down or kind of flat right now. It's also moving sideways in this Darvas box channel. Up volume minus down volume is anemic, let's call it. Advancers minus decliners is right on the zero line. And the VIX is still down slightly as well. So overall, the market is okay. It's not really going gangbusters yet. Let's look at the index charts and see what they look like. So the S&P right there, you can see it's actually, did it hit a new high? Let's look. So the high back here was 68, 69, 91. Let's call it 68, 70. And the high today is 68, 66. So not quite, but almost. And it sold off in the morning and is starting to come back right now. So we'll see what happens by the end of the day. The put call wall is exactly at 7,000, same as it was yesterday. Basically right at 7,000. In fact, let me fix this a little bit. That's this dash line down here, right at 7,000. So that's where all of the options are located. The expected move is slightly above that, and the expected move to the downside is down here. So this is really going to act like a magnet. It's going to pull, I think, pull the market up to 7,000. We've got a Fibonacci level right here that it may stall a little bit, pretty much right at this high. But then I think once we finished our sideways movement, like I said last week, we would probably be doing, then I think we're going to break out and go to 7,000. And you can see down here, the VIX is still very low. The VIX is at 16, definitely below 17. That's very positive and bullish for the market. Let's take a look at the NASDAQ, see what that looks like. That one looks similar. When higher, it also is not quite, let's see what the highs are here. High here is 25,663. This one is 25,655. So 25,663 is the high. High today is 25,658. So we're 5 points away from the high right now. And I think once it breaks out of that, then there's probably going to be buyers right up there. Again, the VIX is low. Relative strength is still right in the middle right here, still moving up. So it's not overbought and it's still positive. It's above 50. So all that looks great if it continues that way. You can see momentum is starting to move above the zero line. So all of this is still implying that we might have some upside left. Let's look at First, let's look at the Russell, because the Russell is really where all the money's moving to, small and mid caps. Clearly, you can see it right now. It actually broke through the call wall. So this is probably going to start to accelerate. Let's see what the high is right here. The high on this one is 252.77. This one is 252.21. So 252.77 is the high. And today we're at 251.61. So about $1 away. We could actually hit that high today. So if that one breaks out, then this one will continue, I think, moving higher. Already broke above the call wall. So that's actually good news. It's probably going to continue higher. This is where all the action is right now. Small and mid caps. All right, let's look at Bitcoin. And then I want to show you a couple of things. So Bitcoin right now is not doing much, just sort of going sideways, down slightly for the day. But it has not gone down to the lows or the open from yesterday. So just a little bit of consolidation. Notice here that the ADX line is moving down. This doesn't give you direction. It just gives you strength of the trend. And the trend had been down. You can see this blue line right here. If we get above that, especially above the 50-day, then Bitcoin is going to accelerate higher, I think. But right now, this ADX, this black ADX line shows you the strength of the trend. The trend has been down, so it's been a strong downtrend. And when this starts to roll over, that means the downtrend is running out of steam. The green has not gone above the red. So just think of these as the bulls and the bears. So we've got more bears right now than bulls, still pushing it down. Once we I think, head above this downtrend line and the 50-day right here, then the green is going to cross over the red, and then we'll be off to the races for Bitcoin. Keep an eye on that. Okay, one thing I want to show you is, well, let's look at the dashboard real quick. And we'll start with the market carpet. This is what it looks like today. Dollar General is at the top. GE Vernova is moving up. Meta is moving up today. NVIDIA is looking good, up 2%. Apple's in the red. Google is in the red. But overall, the technology group looks pretty solid for the day. Amazon is negative too. Meta is the darkest green. So that's the big winner for today is Meta. Costco is the big loser over here, down almost 3.5% on the day. Eli Lilly is down as well. So that one is down to, let's see if I can see the price. I don't see the price in there. But at any rate, it's down as well. All right, I want to show you the sectors. So this is on an intraday view. I have not only the sectors on here, but I have some of the indexes. So the Russell 2000 is on here, gold, the S&P, the NASDAQ 100, and Bitcoin. And these are ranked this is an intraday view, updates every 15 seconds. And it shows you that the big winner is, like I said, the Russell 2000. Industrials, technology are the two leaders right behind that. They're green. Communication services is up there, and financials is up there as well. So here's the S&P. So everything above the S&P line is outperforming the S&P. Everything below it, including gold, is underperforming. The NASDAQ 100 is underperforming the S&P. And at the bottom is Bitcoin. So Bitcoin is the worst performer. You can also see staples, healthcare. Those are two defensive sectors. They're at the bottom too. So overall, Russell 2000 mid and small caps are the real winners. Now we can also look at this over the last week and see where the winners are. Energy, technology, Russell again. Industrials, financials. So these are all aggressive sectors for the last week. NASDAQ 100 is up there. Bitcoin too, over the last week has done fairly well. It's actually outperforming gold for the last week. And everything above the S&P line is outperforming the S&P. And below that is healthcare, utilities, consumer staples. These are all defensive sectors at the bottom. I'll go one more out 1 month and see what's going on. Healthcare, of course, for the last month has done well. Energy, gold, of course, has been one of the big winners over the last month, starting to reverse a little bit. Materials, which is where gold resides, and the Russell right there. At the bottom is Bitcoin, down 9% over the last month. Utilities and technology. So that's what that looks like. Let's also, one thing I want to show you. First, I'm going to answer a question from a subscriber yesterday about some of the charts that I showed. And their question was, what MACD line do I use? So this was on this chart right here, rotation and momentum. And what you'll see here, this is the MACD line, is this green area, and then the black is also a MACD line. And the question was, what are the parameters that I use for these? The way I use this is for momentum, basically as confirmation. It's not necessarily for an entry. You actually could do the entry or the exits a little before this, but it's definitely for confirmation. So what I'm going to do, if we go down here all the way to the bottom, these are the MACD. I'm using MACD histogram. So there's two selections. You can use MACD, which will show you the histogram and the lines, but that's not what I want. I want only the histogram. So the parameters are 165 and 0 for the black line. You can see over here, it's actually gray. So I've smoothed it out with a 5 simple moving average and colored it gray. I set the opacity to 0 so that you don't see the histogram like you do with the green. So in the green, the opacity is 0.4. So this is just some tricks in stock charts that you can use. So simple moving average, just using just 1, so it tracks along with it. And this one over here smooths it a little bit with a 5 moving average. So this is the faster one, the 165, and this is the slower one, the 2165. So the slower one is the green area. This is 2165, and the gray line here is the 165, the faster one. So that's what I use to identify those. If I zoom in on this a little bit, you can actually see them right over here. So there's the MACD, and you can see the little histogram right there, the mountains. 165 is the black line using a 5 moving average. This is a simple moving average to smooth it out. And the MACD, the green one, is a 2165. So that's what I'm using for that. That's just to answer that question. And then down here, there's also a 21-day moving average, which is this blue line right here. That price is following right up there. So that's what I use for this. For those that want to try to recreate it, that's how I did it. You can change the parameters, of course. All right, the last thing that I want to show is somebody asked, do you have to have a stock charts subscription in order to use my website? And the simple answer is generally no. And I'm going to try this. I'm going to turn off my stock charts subscription. So I'm going to log out of stock charts. So this is what my website would look like for anyone that does not have a stock chart subscription. Now, most of the charts should look okay. Let me see. Let's try this one up here. They don't always translate, however. I'm going to try trend analysis for the S&P. So this is what it looks like. Yeah, so that's what it looks like. That's how I created the chart. That's what it looks like without a subscription. You can change some parameters, but not all of them. You cannot create your own charts. You can't save this to a chart list. So you can see I'm not logged in right now. So there's a lot of things that you can't do, a lot of really powerful things that stock charts provides that you will not be able to do if you don't have a subscription. But you will be able to at least see the chart and look at the way that I set some of these up. Most of them should work. I'm not saying that all of them will. So these are the sectors. Here's the 1 week. This gets updated at the end of each week. You can see that came through. Okay. So in general, most of these probably will look okay. Let's look at the bottom finder right here, especially when we get a big sell-off. This is a great one to keep track of. So what you'll notice right here is these are the percentage of stocks above the 20, 50, and 200. And here's the VIX, and here's the put-call ratio, a lot of the things that I showed yesterday. So many things on here you can at least view without a stock chart subscription, but some of them probably won't look right. Like, let's see, unemployment rate. Let's see what this one looks like. This one looks okay. So we haven't had any data, so it hasn't really updated lately. But in general, most of them will look okay, but you can't make changes. You can't save it. You can't create your own scans. So here on my chart list and scans page, you can't create your own favorites to look at it with a 1 year or a weekly or a monthly. You can't do any of this. So I provide all of my favorites here. I provide different scans and stock charts. You won't be able to create any scans like that. So lots of things a lot of really powerful things that you can't do without a subscription. But if all you want to do is look at the charts, then you can certainly do that. So if I want to go over here to the Magnificent Seven, I'm going to look at the zigzag charts just out of curiosity. So that looks the same even without a subscription. You notice that I'm not logged in right now. So you will be able to do that without a stock chart subscription. But there's a lot of things that you won't be able to do. So it just really depends on what your goal is. But there's a lot of power. Plus on my website, you would get the risk calculator. You can download that, and lots of other things in here. There's the portfolios page. Of course, with my subscription, you'd get this, and you'd still be able to see the charts, I believe. Yep, you can still see the charts. So lots that you can at least visualize. Just a lot of things that you just can't do. A lot of the power behind stock charts won't be available to you. But if you just want to look at the charts, you certainly could do that. And I'm sure for anybody that is a subscriber to my site and not stock charts, you've already tried that and know that that's the case. All right, that's about it for today. Let's jump back and take a look and see where we are. Market's starting to move higher. That's a good sign. Not breaking out yet. Oops. Oh, I'm not logged in, so it won't let me go back and look at I can't step through them like I normally do. I would actually have to go over here and actually look at the individual chart. So let's look at the Russell 2000 chart. And that one still continues to move higher. Money flow still looks pretty good. So that one's going up. So the market right now is looking great, continuing to look bullish. Probably will continue into the end of the week. And once we get a breakout on the S&P, and this is the VTI, let's see. Let's look at the S&P one right here. I think when we get a breakout above these previous highs right here, then we're going to start trending towards 7,000. 68.55 is where we are right now. So we've got about 150 points to go to get to 7,000. I think it's going to act like a magnet and pull the market towards it. That's what I think will happen by the end of the year. And then middle of January, watch out. But we'll talk about that when we get closer to it. All right, that's it. Thanks for watching. Let me know if there's anything you want me to look at or talk about. Hope you enjoyed it, and I will talk to you again tomorrow. I'm out next week. Remember, I'll be on a cruise ship, so I don't know if I'll be able to do anything. Starting on Friday, I will do one last one tomorrow before I leave. And then Friday late afternoon is when we head over to the ship. Nice thing about living in Florida is we don't have to fly to get to the ship. We just drive over there and hop on. So that's nice. All right. Thanks for watching, everyone. And I'll talk to you again tomorrow.